we get into the second step. Placement is done now. Now the second step is called layering. And what is the goal of this step? The objective. It is to conceal the origin of profits, distance the money from the source. You have credited that to a SB account in placement stage, or you have purchased demand drafts for 49,000 in the placement stage. Layering is where you try to conceal that, in the sense that you buy DD for 49,000 in favor of a payee. There, it gets credited to a payee's account, and from that account, the payee withdraws the money, and again that is again credited to another account, right? Or again a DD is purchased in someone else's name. See what happens, these fraudsters, they try to create a web of transactions in such a way that at the end of all the transactions, it becomes very difficult for the enforcement directorate or for the competent authorities to trace where exactly the proceeds of crime originated, in which account it exactly originated, which was the account where it was placed. So it becomes very difficult for them. It is transferring money from one account to another account, transferring money from one location to another location, transferring money from one country to another country also. A web of transactions is created in such a way that the originating account itself cannot be traced, right? So what we will have to do when we are at the branches, in case we come across a situation where there is a regular transfer of money from one customer's account to another customer's account, and you don't see any economic sense in that. He transfers money from his account to his wife's account. From his wife's account, the wife transfers the money to the children account in some other bank. The children again, it happens like why they're transferring the money like this, right? You can just keep an eye on such transactions. Or probably someone comes for operating a locker. The moment he operates the locker, he deposits some money into his account. Now what is that you can probably infer? Maybe he was having cash in the locker, he has operated the locker, then he has credited the money into the current account or savings account, right? These are all some suspicious transactions. They may be genuine transactions, but they can be suspicious as well. So layering happens in the form of these things, right? It involves distancing the money from the criminal source, and it is increasingly difficult to detect. The more the number of transactions, more the number of transfers, very difficult to detect, right? So complex wire transfer chains. The money launderer resorts to creating a complex of wire transfer chains. Illicit funds are rapidly transferred through multiple accounts across locations, particularly through jurisdictions with weak AML regulations or strong banking secrecy norms. Why strong banking secrecy norms? He knows that his transactions will be kept confidential. No power in that particular country can force the bank to reveal the transaction of a customer. The secrecy norms are so strong, right? So it makes it extremely difficult to track the trial, right? Then multiple currency conversions. We were talking in placement stage. Convert the earnings from illicit activities into different currencies again and again. Different currencies. Very difficult. In which currency it is money laundering has happened, right? Very difficult for us to find out. Money launderer converts the earnings from illicit activities into different currencies and again reconvert it to multiple currencies, right? He purchases dollars, comes back and exchanges dollars in some other location to euros, purchases euros, goes to some other location, and he may be doing that in India itself, right? And he may again buy some Japanese yen, then send the Japanese yen out of the country. So it has been already converted into 3-4 currencies. Very difficult to find out the trial, right? Shell companies and loan back schemes, and this is, I think, a very ingenious method of layering, right? Criminals establish shell companies abroad. Where do they establish? Normally in places which are tax havens, where no questions are asked, right? For example, Cayman Islands, British Virgin Islands, Luxembourg, Switzerland, Panama, Bermuda, etc. Say shell companies are open there, and funds are moved from these entities using fake invoices. This comes under trade-based money laundering, which I'll be explaining in detail, right? Loan back scheme. What under loan back scheme? What happens? These shell companies which are abroad, they create papers in such a way that the person sitting in India, the actual money launderer, who has opened a shell company abroad, will take a loan from his own shell company, and the money comes to India as a loan. When the money comes to India as a loan, is it a legitimate source or an illegitimate source? The money comes to India as a loan. It's a legitimate source. But the money that is kept in the shell company's account is from illicit earnings, right? So when the money hits his account in India, he will show it to the authorities that this is the money that I have borrowed from a company abroad, right? That is called a loan back scheme, right? Then stock market manipulations. See, our stock market, the volume and speed of stock market can be used or abused to hide money movement. Rapid buying and selling of stocks and derivative instruments through different brokerage firms, different brokerage accounts in different jurisdiction leaves absolutely no paper trail will be there, but then it will be very complex and confusing. I buy stock through one broker in Bangalore, I sell stock in the same stock in through other broker in Ludhiana, then buy stock from another broker in probably Bombay and sell it in Kolkata. So it's very complex, and it becomes absolutely impossible for the competent authorities to catch hold of the trial and reach the source of the origin of proceeds, right? Then we have got this trade-based money laundering. Friends, this is where we are getting hit now, because money can be laundered in three ways. One is in the placement stage, second is through cash, the third is through trade based money laundering. In the first two stages, we have got some strong AML guidelines which will help us to at least prevent a major portion of money laundering happens. But under trade based money laundering, this is what all the money launderers are resorting to now, and this, my friends, is being done through the banks. Because when I'm trying to negotiate a document through a bank, it can be a letter of credit through a bank. The bank deals only with documents. The bank does not deal with goods. Am I right? When you are negotiating a letter of credit, you are dealing only with that letter of credit and the documents accompanying the letter of credit. And you know what is the goods that is covered there. But have you seen the goods? Will you deal with the goods? A question I'm asking. Will you deal with the goods which is covered under letter of credit? Yeah, he says this letter of credit is opened for importing a rocket launcher, right? We see the documents, we see the letter of credit, we see what is being imported, a rocket launcher. But do we go and see whether it's really a rocket launcher that is being brought into the country? We don't do that because we deal only with documents. We don't deal with goods, right? So what these people do are they manipulate the trade documentation through what is called over invoicing and phantom shipments. Now, friends, when I have earned some illicit money, I have parked that money in a tax heaven. I told you know Cayman Island, Virginia Islands, Panama, Bermuda. I have opened a company there. I have parked the money in the company's account. It is a shell company because I don't have a physical presence there. Okay. Now what I will do, I will sit in India and I will show on record that I am exporting some goods to that particular company. The company is mine only. To that company, I'm exporting goods. Now, let us say I'm exporting pens. I'm exporting pens to that particular company. Now, if I'm exporting 2 lakh US dollars worth of pens, I over invoice and show that the value of pens being exported is 20,000 US dollars. And no one questions it. The bank also cannot question it because as a buyer, as a seller, I have got the right to fix the price for my commodity. As long as the buyer is okay with that price, no one questions this, right? So what I will do, I may export pens or any goods worth 2000 US dollars, but I may show the bill as 20,000 US dollars. Then what will happen? 20,000 US dollars will come to India, will come to my account. I am a money launderer. It comes to my account. Now, if the questions are asked, how did this 20,000 US dollars come into your account? I will say that I have exported this number of pens, which is already there in the letter of credit, right? So exporting is not illegal in India. So now what I have earned illicitly, what I have earned illegally and parked the money in shell company abroad, I am getting that money into India. 20,000 US dollars has come to India. Now, is the money cleaned or not? This money is cleaned because apparently the money is from export business, which is not illegal, right? And that is called over invoicing. And I can also do some phantom shipments. What is phantom shipments? I told you, friends, banks do not deal with goods, they deal with documents. I show on document, everything will be there. Bill of lading will be there. If it is being sent through air, cargo receipt will be there. Everything will be there. But goods will not move. It may be vacant boxes, or it may be some boxes which are containing only stones and pebbles, right? Uh, but then the shipping is done, the goods are sold, and the money is received. We call it phantom shipping, where no goods are sent. That means what the goods are described in the letter of credit, those goods are not sent. Something else might be sent, or even goods may not be sent at all, but money is received from abroad for purported exports. That is called phantom shipments, right? Criminals, they leverage this complexity and gaps in the global financial systems for layering, right? Uh, Trade-based money laundering. Friends, I have shared with you a link to my article which was published in Deccan Herald on trade-based money laundering. Whenever you have got time, you can just go through that because I have discussed in greater detail. I'll tell you how this is done. A rocket launcher which was imported through a bank in India, it was imported for $27, a rocket launcher, right? And how is it possible? A rocket launcher being imported for $27, right? Huge under invoicing. But since we do not deal with documents, the banks have negotiated the letter of credit. And similarly, friends, you will be surprised to know a pair of underwears, a dozens, maybe a couple of dozens of underwears, which were supposed to be imported on paper, the value was shown as 72,000 US dollars. Just imagine the goods that are in the letter of credit and the matching amount that the letter of credit covers. It's very very obvious who will pay 72,000 US dollars for two dozens of underwears, right? All these have happened in the banking industry. That is why I'm quoting the same examples, right? And money laundering has happened, right? Then final thing is break that trail. We call it break the trail. What happens in break the trail? They change the form of assets. They withdraw from one account and deposit in another account with another bank. Convert cash to gold. Convert gold into multiple foreign currencies. Foreign currency gone out of India, right? Or their cash is converted to gold. Then gold is converted into foreign currency, and foreign currency is coming to India because of trade-based money laundering, phantom shipping, over invoicing, right? These are certain ways in which layering is being done in India or in case of money laundering, right? What is the indicators and trends of trade-based money laundering? How is it possible for a bank to be sitting in the branch and then finding out whether it's a genuine transaction or is it a transaction which is highly over invoiced, right? You will have, because you don't have access to the goods, you have access only to the letter of credit and to the documents. Items priced well above market value. I told you, 2 dozens of underwear, 72,000 US dollars, right? Can someone believe it? At that stage, if the bank had asked, probably that why is it two dozens of underwears are being probably imported for 72,000 US dollars, right? What's so special about those underwears, right? Or rocket launcher, which is imported for 27 US dollars, 27 US dollars. The bank knows this is the commodity. They have not seen the commodity, but the bank would also know what is the market value. So they will, this is a suspicious transaction where you know what is the item that is being imported, and also the market value is either overinflated, or it is under, very much under the market value. Then you can say that this is an indicator of trade-based money laundering. Mismatch between customer profile and items ordered. Now, I have a current account with you, right? And you very well know that I trade in stationery because I have got a current account with you. But then I come to you with a letter of credit where it is shown that I am importing certain CNC machines, right? What has CNC machines got to do with my profile? My profile is only trading in stationery. Why should I import CNC machines for that? Right? You can't prevent it. You can't prevent negotiating a letter of credit if everything else is in order. But what you can do is ask the customer, your profile is this. Why are you importing the CNC machine? It is clearly not matching your profile, right? Business transfers made for no apparent reasons, transferring money outside India, transferring money to various locations in India. No apparent reason. Your customer is having a current account with you. He is running a grocery shop in your location, but he is transferring money to various other locations in India, or credits are being given to his account from various locations in India. Obviously, it is not for business relationship. It's not a business relationship. Who will buy grocery from a small grocery guy who is sitting in your location? Who will buy it in different parts of India? They will go to their own grocery shops nearby, no? So these business transfer don't make any apparent reason, right? They don't make any sense. Then third party financing. A third party finances it. What is happening? Packaging inconsistent with contents, right? The contents, friends, all these, when I explain to you, you may laugh it off, but such things are happening, right? Content that is imported is let us say a sort of liquid. It's an acid or a liquid, but the packaging says it is being packed in a box, in a cardboard box. Who the hell will pack a liquid in a cardboard box, right? Packaging inconsistent with the contents. These are the things which the bank has to see when a letter of credit is presented to them, right? If even closing the eyes, we open such a letter of credit, or we negotiate such a letter of credit, then obviously questions would be asked. Now, if the customer who is a trader in stationery wants to import a CNC machine, he comes to you and says, can you issue me a letter of credit or a deferred payment guarantee? You can very well ask him, no, you are in trading of stationery. Why do you want to have a CNC machine? Right? Similarly, when he's telling, I'm importing oil, I'm importing liquid from abroad, and the packaging is in cardboard box, because packaging would be described in the letter of credit. It is highly inconsistent. He cannot have that liquid packed in a cardboard box, right? Routing is circuitous or economically illogical. He is importing from Sri Lanka to India, right? But the route is circuitous. The goods go to Bangladesh, from Bangladesh to go to Nepal, from Nepal they go to Panama, and from Panama it comes to India. It doesn't, this is not logical. Why he can't send the goods directly from Sri Lanka to India, right? Size or weight of goods is inconsistent with contents. He says, I'm importing 1 ton of this particular material, but the size of the boxes, the size and the number of boxes given there, it's inconsistent. They just cannot hold 1 ton. 5 boxes, small boxes which are described in the letter of credit. How the hell can five small box hold 1 ton of some material, right? So these are some of the indicators and trends in trade-based money laundering, which you can very well, sitting in the branch, apply your mind and ask a few questions. I am not saying that you will be able to prevent it, because as I said very clearly, we are not police officers, right? We are only bank officers. But if you ask them some questions, the customer will either stop doing it or he will go to some other bank where people might do. We don't know. Maybe because they're not aware, or maybe because they know, but they will do, right? We don't know that. So at least if we ask some questions, and if these questions are not answered properly to your satisfaction, you feel that something is lacking in his answers, he is not very transparent, immediately you can put it under suspicious transaction, correct? So then the enforcement directorate will come into picture, they will look into it. So your job is over. You have acted as a policeman. You cannot stop it, but you have reported it, right?